In this video, I'm going to go over Fibonacci, specifically how to use it when you are trading. So Fibonacci, it's named after Leonardo Bonacci, who was also known as Fibonacci. I believe the origins were something to do with rabbit populations. Basically, they were trying to understand how under ideal situations a population of rabbits would grow. Doing this, they came up with the number sequence. I'm sure you've all seen the number sequence of Fibonacci. All it is starting at 1, you take the current number and the previous number, you add them together, and that gives you your next number. So 0 and 1 added together gives you 1, 1 and 1 added together gives you 2, 2 and 1 gives you 3, 3 and 2 gives you 5, and etc. into infinity. Now, there's also things like the Fibonacci spiral, the golden ratio. I'm sure you've all heard of them also. It's actually a really interesting subject if you want to look into it. But for this video, I'm presuming you're all here to learn about trading, so I will go over Fibonacci with trading. So Fibonacci is a predictive indicator. It's basically measuring pullbacks into key levels of Fibonacci, so Fibonacci levels. I'm just going to pull down the Fibonacci there. I only ever use the standard levels that come on Fibonacci, so you have 0%, 23.6, 38.2, 50, 61.8, and 100%. They're all pullback levels. Fibonacci works best in a trending market. You're basically measuring the pullbacks. If it's into a key Fibonacci level and you get the signals, you can take it as a continuation trade. So with Fibonacci, how do I use it when I use it? First things first, I don't ever use Fibonacci by itself. If you've watched any of my other videos, you'll know that I always look for a confluence of different factors before I will consider taking a trade. It's no different with Fibonacci. As a minimum, I'd be looking for Fibonacci to tie in with key daily support and resistance levels. That's another thing with Fibonacci. I always find that it works best on higher time frames, purely because on higher time frames trends can last a lot longer. I mean, on the daily time frame, trends can last for months and years. I'm going to take you through a few different pairs, a few different time frames, and show you how I use it, how it works. It is a very nice tool. It does work very well. I don't think it works very well because of some mystical numbers. I believe it works because now so many people use it, so many people are aware of it, so at these key levels they are watching for reversals and they are entering into the market. So it gives it, more credence, gives it more power as a trading indicator. So it does work very well. Okay, so we're on the Australian dollar, US dollar, daily time frame. First thing I'm going to do is, let me just see, I'm just going to pull it back a little bit. I'm just going to pick out some key support and resistance levels. I'll do it relatively quickly. If you don't know how to draw support and resistance, there are plenty of videos out there on how to do it. I've also done a video on my YouTube channel. You can watch that if you want. So I'm just picking out the important levels that I can see quickly on the chart. Oops. Here. Okay, so that'll do for this chart. Now, all you're doing is you're coming forward, using these support and resistance levels. First thing you can see is the market is respecting them. Let me just add another line here. Okay, so the market is reacting off of them up here, and then you're looking for this. You're looking for the market to make a trending move. Now, when using Fibonacci, what you do is you take the previous high. So previous high here, you can see, is here, and you take it down to the low. So where can we see lows? You can see a low that you would have measured here and a low that you would have measured here. So all you do, let me bring on the menu across to the chart. So for Fibonacci, all you're doing is you're taking the high. It's where you click the top of the Fibonacci, then you drag it all the way down to the bottom. We'll just take it to the second low here. There. Okay, so market comes down, pulls up, You can already see we've got our daily support and resistance level right here. The market then pulls back into the 23.6 level of Fibonacci. Then you get a couple of signals here, and the market falls away once again. So that could be your reversal right here. Let's see if you took it to the other low here. So if we took it to the first low, right here, so you can see the market then pulls back into the 23.6 level. However, there was no confirmation with a daily support and resistance level. So for me, I would have ignored that one. However, if you're just using Fibonacci, that's how you would trade off of it. You can see it comes up, it stalls, and then it begins to reverse. So let's delete it again, if I can catch it. Okay, and then you pull, let's make it a bit smaller. And then you make significant lows here. You make a double bottom right here. So first of all, that's new support and resistance. You can take your Fibonacci from the high again, all the way down to the low, which is here. Sorry guys, yeah, that's fine. So I'm just going to delete this little rectangle. So market pulls all the way down. So this is your new low. This is still your high. You know, you've not made any significant highs since then. This is the main high which caused the fall off. You're taking it from here and taking it all the way down to your new lows. Then you're getting a pullback. Where are you getting your pullback to? I can actually see a pin bar right there. Is it in a key daily support and resistance level? Yes, it is. So you've got your first confirmation is the pullback into the daily support and resistance. Second confirmation, it's a Fibonacci level at 50%. Third confirmation, there is a pin bar right here, and the market then falls away. And this is exactly how you use Fibonacci. It takes a bit of getting used to. It can take a bit of getting used to spotting the highs, spotting the lows. But that's exactly how you do it. This would be the perfect one right here because you've had a double bottom here, which then pushes off strongly. This is a very strong sign that you've made a new low. You can already see your high is way up here. You're then adding your Fibonacci. It's coming into your key daily support and resistance level. You then get the Fibonacci, the key level at 50%, and the market falls away again. That is exactly how you use Fibonacci. It's not any more difficult than that. It works with selling and also buying. What I would say is you want to align it with overall trend. Definitely Fibonacci is the overall trend. So if we scroll out here, let's have a look. So you can see it's gone all the way down, all the way down. So you could continue using Fibonacci down here. Yeah, and I would definitely stop using it when you get down to huge key lows like this, because this is where you would expect some sort of a huge rebound. But yeah, that's how you use it. Use it on trending markets, bearish and bullish. It honestly doesn't matter. Let's bring up another pair. So here we have the Euro US dollar. We're now on the 4-hour rather than the daily. Let me just have a quick look at this so I know where to mark. I don't want to mark in support and resistance levels where there's been no trading. Okay, so there's absolutely nothing there. Let's have a look. So okay, we start the sell off here. So what I'm going to do is I'm going to mark in the support and resistance levels around here. Now, if I hadn't seen the price action, I would have marked in all of the support and resistance levels. But just for the sake of this video, I don't want the video to be, you know, an hour long or whatever. So I'm just seeing where the market trades, and then I'm picking out where support and resistance levels. So they will be in line with where the market goes. You know, I'm not looking at the market to pick out these levels. I'm using past price action, so they still will be very, very accurate. So you can see as we've come back, this support and resistance level is definitely working. And you can see this one is. Take a few more. Take one down here. Just picking out the key ones. You can take a lot more if you're doing this yourself. So there's one there. Okay, so let's go forward. Okay, we've pushed up. You can see it's still reacting off of these levels. Okay, so now we begin to fall off. So where is the key high? You can see the key highs right here. Oops. This is also a relatively strong trend. So I haven't marked in any support and resistance levels in this area, so I'm just going to ignore it. We'll come down to the next one. You can see it falls down here. So here we have a low here. Let's have a look. Okay, sorry, I had to pause that video for a second there and move away from the computer. So, okay. So we've had a fall off here. Let's have a look. This huge fall off here, this is obviously going to be some sort of a news release. Okay, so this is not looking like the best chart for this, but we will still go over it. I've not really picked any support and resistance levels in here, which is the problem, just because I've done it so quickly. Let's have a look. I'll just pick out some key ones. Okay, so there's one right there. So we'll just use that one. And we'll see if that works out. Okay, so you can see first of all, it is working out. Now let's have a look. So you've had your main high here, comes down, makes another high, comes down, makes a smaller high, then falls down. You've had one fall down. This is a ranging sideways, and then you make a tiny little new high. So this would be a new level. If we then come down to the lows here, and then we'll take the support and resistance level that we've already marked out. So the reason I've taken from here, guys, is because this is a significant move on the trend. We've fallen down, we've found support and resistance, we've tried to push higher, it's failed, but it has made a high. It's then fallen off again. It then falls all the way down. You can see it crashes through support and resistance all the way down. So this would be your new low. It then pushes higher. It pushes into key support and resistance area, which ties in with 38.2%. You're simply looking for your reversal signals. One here. You got countless here, to be honest. One here. Oops. One here. Got one here. You got one here. So you're getting lots and lots of evidence that this trend wants to continue. It's on a fib level. It's on a daily support and resistance level. And what you're doing is when you're going down the chart here, you're taking the lows as they come. So you've made a new low there. You'd have your fib level. You can see it works into the 38.2. However, we don't have any support and resistance levels here, key support and resistance levels here. So simply, you just don't trade it. But because it's not using your key daily support and resistance levels, you just maintain what you're doing. Comes down again, down into here. And this is where you get your reaction. You get your reaction in the 38.2%. You know, you can actually see if I zoom in a little bit. I'm not sure why Fibonacci keeps turning grey rather than black. I'm just going to change that. There we go. Okay, so you can see a lot easier now. You can see it's acting right on the support and resistance level, right on the fib level of 38.2%. You're getting one signal, two signals, three signals, four signals, many signals, and then the market falls away again. This probably the daily time frame and the 4-hour time frame are my preferred time frames when I'm using Fibonacci. Just because they do trend a lot better on those time frames. Yeah, they work very well. So, okay, I've not got any support and resistance levels down here. I'm not going to keep going and drawing them because it'll take a very long time. But you've seen exactly how it works. That's the daily and the 4-hour now. What I'll do is I'll do one more. I'll do 1-hour time frame. We have the Great British Pound, Euro. Okay, so let's have a look here. What I'll do is I'll do the bullish run on this one. I'll take this one right here as the one that we're going to use the fib levels on. So I'll mark support and resistance back here. Let's have a look. Key levels. Got one there. Where else should we mark in? Let's have a look. Got one up here. Okay, so that's the move there. So scroll back a little bit. Okay, so we've got plenty back here. Just to there. Got one down here. Just take it to there. Okay, so that's a few marked in. So we've marked them in back here. You could be trading off of these as your support and resistance levels. But for this, we're using Fibonacci. Okay, so you can see right from here. So we'll take here. This is the low. Right here. Bring this back over. So that's the low. You can see we've had a very strong run up. You have a pullback here. I can tell that's not going to be a fib level, so you wouldn't have traded it. You would have completely ignored it. We've then made a new high here, and we pull back once again. So let's take it to there. Okay, so there we go. So you've made a run up all the way up. You've made a high. You can see the high. You can see the market starts trending sideways. So you would have plenty of time to get your fib level on here. Does it pull into any key levels? Well, we've got our support and resistance level right here. Does that tie in with a fib level? It ties in with a 38.2% Fibonacci level. The market then pushes higher. So this, I mean, this is all you're doing, guys. It's purely a predictive indicator. It's purely picking levels of pullback. If you get confluences along with your fib levels, it's a very, very nice way to trade. So you'd have your confluence of your support and resistance level, your confluence of your Fibonacci level, and your confluence of your signal candles. I always say I look for a minimum of 3 confluences. There's your 3 right there. Be careful with it on choppy markets, markets that are moving sideways, sideways in a range. It's just moving sideways like that. You can have a lot of false signals with Fibonacci and suffer quite a few losses. So hopefully that was helpful. That's Fibonacci. That's how I use it, and I know that's how a lot of people use it. There's lots of different ways to use it. I mean, you can use Fibonacci extensions, and there's all sorts of different methods for using it, but that's the most common. That's the most effective for me, and that's how I would suggest using it. Just take one more whilst we're here. Let's have a look. So we made a new low. You come up, you make a new high right here. So you made your run up. You're then making your pullback. You're looking only at your key levels. Down here, is it a fib level? You got 50, 61.8%, almost ties in exactly with these 2 support and resistance levels. Then get your pin bar here. You then get an engulfing candle right here, and the market shoots up. Oops, shoots up. Oh man, sorry, this is not working very well today. Market shoots up like that. And that's how you use it. So that's, you can use Fibonacci on the smaller moves as well. It doesn't need to be the huge moves. You've still had the run up. You've still had the pullback into a key fib level and support and resistance. And you are in a trending market, which is trending to the upside. Okay, so hopefully that was helpful, guys. I'm going to leave the training site address for the training program that I've done for the 5-minute time frame, trading Forex and indices. I'll leave that on this video. It saves people emailing me. I get a lot of emails every day asking if I do any sort of trading. If you pop over to that training site, it has a very good outline of the training program, and it should answer most of your questions. Also, please do subscribe to Decisive Trading if you're learning how to trade. That's absolutely free, and I try and post at least a couple of training videos per week. Okay, I'm James R, guys, and thank you.